Hey guys, Bitcoin. Yes, let's talk about Bitcoin. Let's take you up and explain why we've been cautious and bearish and saying it needs a pullback. You may have heard I've been slightly bearish and cautioning against it getting too out of hand, and let's remind you why. The big part of this is where we are now, and this is further. We're halfway through the month, but what I want to highlight, and that people always trade with your bias of your trends to the big macro. So direction should be determined by your macro. Which way does the larger river flow, making your life easy? So if we do this like that, let's draw and put it on. I'll go with orange. That was illustrating major pushback on your monthly charts, and there it was again. These were top out events. Now I'm asking you to look here at your post 13.7 run, then the subsequent attempt, and now, and yes, we're not finished the month, but that, as you're probably aware, is called a shooting star. You don't want to hear this. You don't want to hear that there's a pullback. Remember, you've got the Burj Al Jurab or Al Arabia volume by price here, where this was the most significant price range. Right here on this bear period, where we became seriously unpopular for saying the market will dip and let go of the 6,000, 7,000 K level and drop down and make our target with a number in the threes, 3744. Remember it very well. And you've got that big volume by price down here. Now you're sitting here and you're getting a shooting star. You're getting a big sell-off wick and a lower close after this pushback, 50% pushback. So that was your first warning on your monthly. Then you close lower. It's a red candle on the monthly. You've just had 1, 2, 3, 4, 5 winning months. You've got Max Kaiser coming out and saying we'll be 15,000 before the end of the week. I think that was last week. You've got the usual McAfees and all of these people throwing out the biggest numbers they can. And I think in time they may all be proven correct. They're useless trading information for now. It's peak bulldom, and actually what ends up happening is you usually go the other way. So for us, I actually, and you're not going to like this, I'm going to tell you exactly what I've told my premium guys, that you made your high here in December. So this was the apex point. 2018, you were December 2017 was your high. So I'll draw it out here. Let's pull this chart out so that you guys can all see a little better. We don't need all of that other history. Let's make it super big and stay on the monthly to understand where I'm taking you. And now we're going into the dark. You just jumped into the rabbit hole of sniper circledom. And this is what we talk about. Okay, so maybe I'll change it to something a bit stronger like the red. So big sell-off. That was your December high. Ooh, let's go into draw mode, shall we, instead of wiggling the chart around. That was your December high. That was just shy of 20K on most exchanges. And guess what? You bottomed out December again. 1 year from top to bottom. And that was a painful, miserable year for many of you as net bulls. That was 1 full year. Right. Now, in 6 months, that was June, right there is June, was your next high. So 6 months, 12 months. That's your cycle. Now for us, you are in one macro continuation pattern. So you're going to get your bull break at some point. In my opinion, you are going to get a mega bull break. But it's not when you want it, which is now. Because you always want it now. Because you're greedy that way. You're like children. I understand. I also want it now. But guess what? Sometimes you have to wait for the best things. And that's how it rolls. So that's your 6 high. What I suspect is happening is that you're going to possibly have 5 to 6 months on the way back down. In other words, remember your Burj Al Arab volume by price that I was showing you there. You quite potentially could come now back and revisit here. This is sustained selling. The market ain't ready for this. And I know the real world is blowing up. I know you're all interested in Trump and China and why Bitcoin's about to hit 100,000. It isn't. It's not. Gold is. Okay? So they've lost that for the time being lockstep. Gold and the other assets in the real world are going to be reacting. The institutions and the city people recognize negative interest rates. They're going to buy something that doesn't charge them money for it to be held. If you put it a hole in the ground in your back garden, it costs you nothing, and you dig it up in 10 years, it's still there. It hasn't lost value. It's still a bar of gold. So that's where they're going to be going. So 6 months is my take for the top, and I think 5 to 6 months will take you to a bottom. In other words, I think it's going to go lower, but it's going to go lower, slower. Even this had a period where many people had reason to believe it was going to be bullish. The only problem is they don't understand HVF method, and they don't even know, they weren't prepared to see a descending triangle even, which is traditional technical analysis. It doesn't give you the right target, but HVF did. Anyway, so what will probably happen is you're going to have a slower low making process that might have a 6K in it here. This is your macro. In other words, it's going to be softening. People are getting frustrated trading Bitcoin to the long side, and they're losing money because they shouldn't be. But Max Kaiser and McAfee and Litecoin, Tom Lee, is it Tom Lee? Which Lee is it? I don't know. One of the Lees. Anyway, 5 to 6 months. Maybe 7 if it's going nice and slow, which will take you from here to the end of the year roughly. So it could be a month before, could be a month or two after. This block time zone, what I would call relative low 2, after your relative low 1, after your high 1. And this is, I'm afraid to say, a high 2 that you don't want to hear, but that is telling me rejection, rejection, rejection. And it's repeated rejection. Sell, sell, sell. Get over it. You're getting feedback. Keep going long into where you're getting ambushed. You're going to keep getting ambushed. They're sitting there and they're waiting. They've got a tuck shop, they've got a chocolate bar, and they've got a big fat Uzi with loads of rounds, and they're shooting you up every time you're crossing that line. Good luck. Maybe you should stop crossing the line. Come back later when you're better prepared. So there we go. So relative low 2. That's, as I've said, 2020 is probably the rough guess, a bit before, a bit after. That's my time zone that I'm giving you for that low 2. For investors, that's going to be a great time to hodl up. If you're investors, 6, 6.5, go knock yourself out. You might even get 5.5. Normally key levels of significance are just run. So you get a step throw. You step through the line. Why? Because everyone can't trade at that price. And that'll be an exhaustive. You can maybe get a nice hammer there. And the wick of the hammer, remember this is a monthly chart, could be a number of days, even a week and a half, but the wick of the hammer will give you a great entry on there, on your overall entry. So this is cycling back. So throughout this period, even though gold and silver are going up and looking good, this will be easing. Remember, gold and silver haven't gone up in a long, long time. Bitcoin has. It's just charged from 3.2 to 13,000. You greedy bastards. You want more? No. He's got to wind up a little bit. Chill out. Have a cup of coffee. Sit down. Get some juice back in his legs before he starts running again for you. So that's got to happen. So what do you think happens next? I would say overall, what I call the third impulse will probably come in around 6 months. 3 months up, 3 months down, give or take another 5 or 6 month cycle. So you're here 5 or 6 months. You're going to be starting from May through till June, July, and that's now off the chart. So maybe I should just wipe the face a little bit and pull a little bit of more time in here. We can say goodbye to all that other stuff. There you go. So we draw this super quick for you again. So once again, hey, give me pen, give me pen. 1 year, 12, 6 months, another 6. So the 6 months was to June, takes you to the end of the year for the low 2. And then 3 months up, kind of to March, 3 months back down to June. So low 3. You want to load up at those points. This could be a 6,000, 5,000, 6,000. I've dipped it a bit deep here. So this could be a 5.5 to 6K thing. This won't go as low. It will hold up a little bit better, and it'll look super boring and everyone's going to be forgetting about crypto. That is when I'm really getting excited. Relative low 3 up here, maybe 7.5 to 8K, and everyone's a bit bored, and that maybe gets up to 9, maybe a little shooting star into 10, you're just crossing the 10 line, who knows. And that's when it gets really spinning tops, boring, not much going down in crypto land. Man, you must get sweaty palms for that. We are going to have ourselves a big move, and I would guesstimate if we are middling around 9-10K, you're going to end up at 27K by the time the break is done. It won't happen absolutely overnight, but it'll be pretty darn quick, and we'll be talking. So we gave you another 6 months to the low 2 and another 6 months from the 2020. So around about mid-year, your low 3 will be in. That's this bit. So when does the break come? I would say anywhere between 3 and another 6 months from here. So from July to 2021, the breakout occurs. Because it depends. Sometimes after you've made your high 3 and your low 3, you go straight to breaking out. It could be rushed by events, or you can get really tight and you can form another squeeze on a lower time frame. We're sitting up on the Mount Everest and we're looking at monthly charts here and saying which direction should you be trading. Super macro, the way is long. Trend, well, that was up, but we're starting to put it on amber. Trend view, which would be your daily, weekly, we're starting to put it on amber. So that is long. This is not so sure. Could be going down. Those things tactically are warning me down. And that is your daily 4 hourly, and on the other time frames it's actually bear. So while this was a green light, these others are reds on the 1H, 2H, where trend is 4H and daily. That's the only green light, and I've drawn it in red just to make sure you're confused, but I'll fix that. That's the only green light at the moment, but it's an important one. This is now amber, which is orange. It's just turning from bull and starting to flag red, and the short time frames are already flicked red. And of course those are your 15 and your 10 and your minor time frames are already red. So you'll learn about this on far greater detail when you come on board. But that's kind of where we're at. So 27K, but you're not going to make the break. You're going to only break for that around this period. And that's quite a way off. You're talking mid-year next year. That's a guess. That's my best scenario for Bitcoin on the macro. In short, a bias to short will serve you well. What about dominance? What about dominance? I still think there's crap that needs clearing out fundamentally, but what does the chart say? Well, if you look at coin market cap, Bitcoin's gone down less than Ethereum and Ripple. How many times do I tell you? Short Ethereum, Ripple. Short, Bitcoin, Ripple. Short Bitcoin, Ripple. Just beat up on this piece of shit. Come on. Yeah. How many times? Keep it on. Small trade. Leave him on. Of course, it does matter. Eventually, we'll be proven wrong, but I don't think so easily. What did that happen there? Bitcoin dominance. We've had a smackdown. What time frame are we? We're on the... Oh, this is a macro. That's why we're doing this. It's absolute macro. So that was the alts craze. And we just keep making higher highs. So Dow theory... Let's get this straight. You know, I've also shown you other setups and patterns that have led us to be bullish. This was one big continuation pattern for Bitcoin dominance. But since this breakout and even before, higher highs on higher lows. Simple as that. So nothing changes on the big time frame on Bitcoin dominance. There's your absolute low. That's your first high. That's a better high, etc. Overall continuation pattern. Again, a continuation pattern. Higher highs, higher lows, higher highs, higher lows. You keep doing that. You keep crushing the likes of XRP and Ethereum by being BTC versus alt. You keep that trade on, and now I'm actually even saying you can do USD. So dollar will be strong and start to squeeze the emerging nations. That's why you get 360-degree analysis with us. We're keeping an eye on the precious metals and the FX, and we can see which currencies. A bit of a dollar milkshake theory going down. There was going to be strength coming into the dollar, apart from the yen and maybe the Swiss franc. So USD, you can even trade USD versus alts on the short side. They're going to keep losing. You would have made 12% today on Ripple alone. 12%. So as long as that continues, but you've got to choose your entry point. If you go too big and you choose your entry point after a major move, you're going to get shaken out on the rally, and then it'll go back down again. Okay, so that's your crypto update. Sounds bearish. It is medium term. I've been saying a few times in it. I've not been posting much on crypto. I haven't got anything positive to say. And the problem I have with crypto folks is they don't like it if you're not cheering the game on. And if I haven't got setups and it looks like it's a bit overcooked, as it has done for a while, and it's being proven, and I didn't show you, and the guys in the community were nailing this. First setup in a new trend of our pickups. It's known as the first ascending inverted. It's one of the trickiest ones to spot. I give it to you there. You see that red line? That was the break over performance zones, and it's the down. Don't chase in short now, because I'm expecting, here's the scenario of what I expect here. So you can see some of the analysis and some of the better work. I actually was still thinking, could it be up at this point? And that was a confirmatory amount, so I got short here on that grind line. But better than me implementing my own theory, the guys were short from there. And I thought, I don't know, it could just be an ugly upside, and I was still thinking there would be a final little eke out, because I was biasing long on the super macro. Boom, that told me no, and that's the beginning of the sell-off. This is abrupt sell-off. Don't chase in here, because I think it's going to bottom before these lows. I think it's going to form, it's not going to go down in a straight line. Nothing goes down in a straight line. So here's your scenario for what we assess that's going to happen. You're going to start getting buys. You're going to run the 10. That was a very clustered zone for volume by price. That was very clustered. You will support there or thereabouts. Then you'll get another rally. Try get your 11K, and you'll end up with another high. I will start to look at shorts from here for downside after this. So for me, we're looking in the same way. You got a nice slap in the face and a squeeze like that. The ascending first in a new trend. I'll be looking for an inverted setup for the down leg to around 5.5, 6.5K. And we'll see what targets we get. We'll be talking about this in the sniper community, where you can go find out all about it, and you can get updates day to day. So this is just catching you up with some of the thinking and some of the things that you've been missing by not being in there. And as I say, if you're in that, I think after that breaks, after we come down, we'll have a little bottom and a little bit of a rally, because we are hanging on here. Get back to the 11, and then I think we could roll south before we go further up. So forget all the mega bull callers. They'll always, as you're at these relative high points, come out with their 15K before the end of the week, or 100K in the end of a year. Anyone who talks about forecasts more than a year apart, I'm interested in what you can feasibly, with technical competence, predict short term, that you can trade leveraged. We're all hodling for the 100K, the million K, when it all goes on in 5-10 years time. That's fine. That's a given. How do we leverage trade what we're doing now, while we're also building up our investments? So you should see, I think you might get another chance to accumulate at the 5.5 to 6.5, maybe 7 levels. And I think that's going to come out of whatever comes here. So that's what you have from me. Another move. This is steep down. Another move, steep down, like that. And off we go. And we dip, and we're running down. And then we get back down to these levels. And then we start to base. We come back up again. And then it was per that macro that I showed you. Okay. By the way, for accumulating and building your precious metals, you know, often sometimes traders want too much too soon. Sometimes just building every month, $50 a month. There's a Bullion Vault link below. If you want to thank me for the work I do that. It doesn't cost you any more than if you go direct. And it's cheaper than Maloney and Shift for storing. It's 100% allocated. There is no fractional reserving, and you can then get named bars once you've got a certain amount of silver or gold, and you can collect. So there are charges with that, but that's who I use for my bullion accumulation. And of course you can go accumulate crypto as well, but I think you might do better to grab a bit of cash and wait for that 6,000 dip back into the sixes, which I think is coming. All right, catch you on the other side. Hope you enjoyed that. It's not a message you want to hear, but it could be accurate. It's not felt bullish for me, crypto, for a while, and it needs a sell-off. Talk to you later. Bye.